Hello and welcome to the Economic Times Rising Bharat Summit. We are having the most comprehensive deliberations on what to expect from the upcoming Union Budget. We are very happy to have Sandeep of Visa, who is the General Group Country Manager for Visa India and South Asia, to talk about the payments and fintech sector in the Bharat Summit. We will bring a keynote to you with Sandeep right now. Sandeep is a veteran who has worked in banking, insurance, and other financial services industry companies. So, Sandeep, the last couple of years have been, very rapidly evolving scenario for the overall payments and fintech industry. So, with hindsight, how do you assess the 2022 payment industry events? There have been a lot of regulatory challenges for payment firms, fintechs, and card networks over the last couple of years. What are the lessons that you carry forward from those experiences? How do you look at what's going to happen, or how the industry is going to shape up in 2023?
So, Anand, if I take 2021, 22 as a bit of a continuum, we've seen some very, very clear and strong trends emerge from a payments ecosystem, payments landscape standpoint. Number one, what we have seen in India in terms of the democratization and adoption of digital payments is pretty unprecedented. Of course, the big tech companies, the fintech companies, card networks, banks, government, regulator, everyone has had a role to play in what has actually transpired. We've seen a significant growth in e-commerce. We've seen a rapid rise in online transactions. In fact, pre-COVID, from a cards industry standpoint, about 35% of our card volumes and transactions used to typically happen in card not present. That figure went up to above 60% during the lockdowns because people were not moving out of their homes. But even post opening up, the card not present ratio is now nearly 60%. So actually more than 50% of even card transactions today happen on e-commerce platforms in the online contactless mode rather than in a typical face-to-face transaction. And mobile payments has grown phenomenally. So today, your phone is your primary device for payments more often than not. And that's again, something that has really taken off in the last couple of years. I must also add, Anand, that the last couple of years has seen a slew of regulations. And rightly so, the regulator has been, has kept consumer protection top of mind. And, the card industry and card networks in particular have had to implement a number of, regulations around card control. So today, consumers have to explicitly opt in for cross-border transactions, for e-commerce transactions, for contactless transactions. There are now regulations around recurring payments. There was the massive tokenization mandate, which I guess we will talk about a bit in more detail in due course. And then, you've had PAPG guidelines, the payment aggregator payment gateway guidelines. You had the lending on PPI regulations that came out. So we've had some major trends. We've seen a slew of regulations. So it's been a very, very interesting, very dynamic, at times challenging for the industry and sector. But of course, we've also seen massive growth. In terms of some of the impacts of all of this, in India, card networks offer, possibly the highest standards of security versus anywhere in the world. But the security bar for card networks doesn't necessarily extend to other platforms. And in terms of learnings and takeaways, Anand, I would say that consumer protection is, of course, very, very important. But we also have to find the right balance between consumer protection and consumer convenience. Because at the essence of anything that is digital, you have to also look to eliminate friction, give consumers choices, and therefore, having secure, interoperable platforms is as important as, cost, national good. So getting that balance right is something that is very, very important. I want to just take the example of tokenization, which I alluded to earlier. Now, Visa is one of the companies which, both globally and in India, has been at the forefront of evangelizing tokenization. And post the RBI mandate in India, the entire payments ecosystem, including us, with the support of the RBI, has actually implemented card-on-file tokenization in India at unprecedented speed and scale. Today, as a matter of fact, within the Visa world, India has the third highest number of tokenized cards, token-enabled cards and, token transactions. We all understand that the genesis of tokenization was security, but one of the sort of associated benefits that has come with tokenization is the fact that we've seen a material uptick, almost a 4 percentage point uptick in payment success rates for tokenized transactions. Eventful year, great growth, slew of regulations. But as we move forward, also important that we keep in mind that balance between protection and convenience.
Are there any expectations from the budget, finance ministry, and even probably the central bank that the payment industry is expecting, considering that all this is going to have an impact on how the payment industry is going to move forward?
As an industry and an ecosystem, Anand, it's not just about the budget as an event. We need the right sort of policy interventions and enabling regulations that happen not as part of the budget, but happen through the course of the year and over years to grow, innovate, and provide consumers with choices. And from that perspective, I think it's very important that we keep in mind that despite all the good things that have happened from the rapid growth of digital payments in India, I mean, we are now talking of over 100 billion transactions, digital transactions that are happening annually. And, there is a vision out there to actually have 1 billion transactions a day. So even this number is expected to grow at 3 to 4x of what it is currently. Despite all of this, nearly 60% of all personal consumption expenditure, which in India is around 1.6 trillion US dollars, is still cash. So there is a significant amount of cash in the system, cash displacement opportunity that continues to be there in India. And in order to be able to rapidly displace cash in India, we need continued policy interventions and enabling regulations. And lastly, I would say that, India is a very large, a very complex market, which requires heterogeneity and heterogeneous solutions. So there isn't a single homogeneous solution or a single platform that's going to address every consumer need in the most efficient manner. So our ask, not necessarily from the budget per se, but from the government, from the regulator, is that, we as a global network would like a level playing field, which is based on the pillars of interoperability, resilience, security, speed, and cost. So to look at everything that a strong digital payments infrastructure needs to have in order to be able to offer the consumers the right balance across all these parameters and ultimately, choices. So that's kind of, what I would say as an ask. And it's not purely a budgetary discussion. It's about, policies and enabling regulations.
While digital payments have, grown by leaps and bounds over the last couple of years, card networks and, other payment, networks have not necessarily been, beneficiaries. It has always been, UPI. Also, there are a lot of changes, new developments, things that are making UPI much more easier and faster has come up. credit on UPI could upstage several, fintechs in the BNPL space, and even card EMI products, could be affected because of these new developments. So, government has continued to subsidize, RuPay also, which has a sizable market share already in the, debit card system. So, how prepared are, fintechs and network companies to face such, challenges in 2023?
So, Anand, I must start by saying that it is extremely important that we kind of don't lose sight of the fact that cards and card networks have also grown very, very strongly over the last 4 or 5 years. Um, Specifically, cards itself have grown at a 20-25% kind of CAGR over the last 4 or 5 years, despite COVID and lockdowns, etc. Now, again, also to start to put this in some context and getting into some specific numbers, today we have roughly 80 million credit cards in the country, and about 40 odd million are unique cards. And if you think about it, a country like China has over 900 million credit cards. And, China's GDP is also 5-6 times that of India. But the difference in the base of credit cards is more than 10 to 12 times. We also have about 400 million people in the country on whom we have some kind of data, credit data, salary data, etc. And we reckon that there are about 220 million people who are potentially eligible for credit. Of that, if only 40 million today have a credit card, then the credit card market itself has headroom for 4 to 5x growth from where it is today. So, let me take contactless payments. I mean, countries like Australia, Singapore, UK have achieved over 90% of all payments there are contactless. Sweden as a society is a 90% cashless society. As I mentioned to you, in India, we still have 60% of all personal consumption expenditure, which is still in cash. So, as a country, there is no denying that we've done a phenomenal job in the last few years in terms of the growth of digital payments. But there is significant headroom for growth for all participants, all players in the ecosystem. It is not one versus the other. All of us have a common objective of cash displacement. So in some ways, we have a common enemy, which is displaced cash, right? And that's also speaks to national good. The more we displace cash, the better it is for the country, because printing cash, managing cash is expensive. But just as India has done such a successful sort of pivot in terms of democratization of digital payments, we believe as Visa, we have a huge role to play in terms of how we can help the payments ecosystem and the banking and financial services ecosystem in democratization of credit. Because that's, like I said, that's where a huge opportunity lies. So, what's happened in India is great. Real-time payments is absolutely, India is a success story in terms of the RTP rails that we have built. And that's, across UPI, RTGS, NEFT, and IMPS. But this has not come at the cost of the growth of the card networks. It's come because of rapid displacement of cash, particularly small ticket cash transactions. And in terms of the more broader question, in terms of how card networks can in some ways collaborate with the RTP rails, that is absolutely something that we as Visa have done in other jurisdictions in the world, and we would look for the right opportunities with the right kind of construct to be able to do in India.
Okay. Here there is actually one more point that I would like to discuss. Do you think all these people who are actually first-time digital payment users who started using digital payments with UPI, do you see a chance of the same customers migrating to card payments, especially for big ticket purchases in the future?
Anand, that's an absolutely natural evolution. And why do I say that? So first and foremost, if you think about it, a credit card gives you, a certain amount of credit period, right? Now, whether you actually then borrow or not is a different matter, but you have a natural inbuilt credit period, be it 45, 55 days, you enjoy credit for that amount. Credit cards come with a slew of rewards and value propositions, from cashback to, other rewards, you have a very, very strong, and I must emphasize this, disputes, chargebacks, grievance redressal mechanism that credit cards support, which is not necessarily present to that scale and, in that form and shape in other payment forms. So credit cards and debit cards offer a slew of advantages and benefits. And consumers who have migrated to digital payments, there is a very natural rationale for them to also start to use debit cards and credit cards. There's another phenomenon that is playing out in India, which is important for us to kind of put into perspective. About 10 years ago, 1 in 10 cards that were issued in India were co-brands. Today, 1 in 3 or 1 in 4 new cards being issued are co-brands. So there are some fantastic value propositions and engagement platforms that co-brand cards provide. And these are not just airlines, e-com marketplaces, hotels and restaurants. So for consumers who are moving up in terms of their sort of evolution, incomes, buying patterns, etc., a number of these co-brands offer, again, very strong, very differentiated value propositions to the consumers. So both debit cards and credit cards is, the sort of migration or evolution of customers who are doing digital payments to debit cards and credit cards is a natural journey. This is something that we do reckon. And, you take the example of China as well. Again, you had, the fintech driven wallets in China, but that has not led to a decline in use of cards. People actually use the cards to fund the wallet because of the rewards propositions. So, there is a very strong, compelling rationale for this evolution and migration to happen.
So, I mean, over the last 7 years, the credit card growth has been quite, astounding in India. Earlier, while in 2010, 12 period, we had seen similar kind of an expansion, but then, NPS rose for a lot of banks. But then the last, 7-8 years has been followed with no such, surprises, shocking surprises. So, do you think this can go on for, say, next 5 years? How do you see the growth of credit cards in India over the next 5 years?
We see a terrific opportunity for the democratization of credit, and I would say responsible credit in India. And that could be with a physical, as in a plastic or a metal card. It could be a virtual card. It can take various form factors, but fundamentally, we see this huge opportunity for growth here. And obviously, thanks to the evolution of credit bureaus in the country, thanks to the account aggregator models that are out there where you are able to capture alternate sources of data, the quality of credit underwriting in the country, and the ability to underwrite first, and then the quality of that underwriting has also improved over the years. So as long as this is done in a very sensible, calibrated manner, there is no reason why the growth will not happen that I spoke about, because like I said, there is a clear headroom for 4 to 5x growth of credit cards, but it should also happen in a manner in which the quality of portfolios, the quality of credit is also maintained. Overall, for the reasons that I just outlined, the availability and quality of data, the kind of propositions that banks, networks, and the co-brand partners, notably merchants, are putting together, and just the fact that a vast number of people in the country are getting more and more comfortable with digital payments, the benefits of things like tokenization and contactless payments and the security layers that we are able to provide today, we just see this market as having huge potential for growth.
Visa also works a lot with startups. So what are the kind of, technological innovations that are going to happen, in 2023 and beyond? And also, how do you see all these, technological changes helping government's larger vision of financial inclusion? Not necessarily, going to the bottom of pyramid kind of an economic strata, but overall, when you say financial inclusion, people who have not been, had not access to credit cards in the past, but now because of alternative data that we have, they are probably worth considering. So those kind of things. How do you see the technological evolution helping government's larger agenda of financial inclusion?
First and foremost, as Visa, we have a very very sort of rich engagement model with the fintech ecosystem. There are a number of fintechs out there with whom we partner and collaborate in different forms and shapes. So we have a Visa Accelerator program. In fact, we just concluded the application process to the Visa Accelerator program, and over 72 fintechs in India applied to be part of the Visa Accelerator program for the year 2023. Every year we pick 5 to 7 top fintechs from Asia Pacific. We mentor those companies. We do POCs with them. We co-create and work on specific ideas and initiatives. And it's again very, very interesting to note that some of the companies that have been part of the Visa Accelerator program, we have also invested in those companies and taken a strategic stake in those companies. Though that's not a necessary that's not a precondition to that, but certainly with the fintech ecosystem, we have this accelerator program for mentorship and partnership. We do from time to time have simple commercial partnerships, but also from time to time we take strategic stakes in certain fintech players. And our whole industry is built on the idea of digital partnerships. So we have dedicated people in the organization who focus on that, and those partnerships are structured with big techs, with fintechs. They are structured around commercial partnerships and or equity partnerships. So there's just a very, very interesting kind of framework with which we engage with fintechs. You asked me some of the areas that we are very, very interested in, keen on. So Web 3.0, embedded finance, buy now, pay later, open banking. These are all areas and themes in which, we are very, very keen on partnerships. And last but not the least, I forgot to mention, we've also done acquisitions globally, where we've, actually acquired certain fintechs because we felt their business could actually integrate with ours. And, last year we bought a bank called, a player called Tink in Europe. And, there have been other acquisitions of pretty significant scale and nature that we've done globally. So that's something that we evaluate from time to time as well. But again, coming to the last part of your question, the role of fintechs in financial inclusion and how we partner and collaborate. So again, that's an area which is of very, very keen interest to us. And when it comes to women entrepreneurship, financial literacy, financial inclusion, working and partnering with both government agencies as well as fintechs is something that is very, very close to us.
Thanks a lot, Sandeep. With that, we come to the end of this edition of ET Bharat Rising Summit pre-budget conversation. Don't forget to check out ET special budget coverage on our website and apps for the latest sector-focused discussion. You can also visit our dedicated budget microsite for a comprehensive coverage of budget FY24. Thanks a lot, Sandeep. Thanks a lot for your participation.
Thank you, Anand.
Fintechs are playing a critical role in changing the face of the country. The promising sector has already given India over 20 unicorns and is expected to reach $1 trillion in throughput and $200 billion in revenue by 2030. But what does the sector want from the government ahead of the Big Bang Union Budget 2023? I'm very pleased to welcome an esteemed panel to discuss this. Joining us today, we have Suhail Sameer, former CEO of BharatPe, Ganesh Rengaswamy, Managing Partner of Quona Capital, and Mihir Gandhi, Partner at PwC. Thank you so much, guys, for being here with us today. So good to have you. Just to begin the conversation, fintechs, as we see currently in the country, are mostly centered around the metro cities. But the larger idea of digitizing finance is to take it to the villages, the smaller towns, rural areas of the country. Incentivizing such moves will further the cause of financial inclusion. Is the industry looking forward to any such blueprint from the government as we speak? Suhail, why don't you begin with this, and Ganesh and Mihir can thereafter add to your suggestions.
No, absolutely. I think we are. This is also the last budget or full year budget of this government. So we are all expecting a heavy push towards rural. I think many of the initiatives which the government, NPCI have taken on UPI 123, UPI Lite, I think they are sort of pointing towards intent of going sort of deeper rural, low connectivity areas, etc. Right. So I think there is expectation. There is expectation around 2-3 areas. One expectation is support on infrastructure development and sort of in the form of incentives, SOPs, whatever you call it. There is expectation around government already sort of gives the banks some money for sort of taking digital payments in, better transfer of that towards sort of fintechs who are actually driving their adoption, and also into technology, right? And benefits which can be sort of availed by the fintechs if they invest in technology and if they go into rural, right? So there are, but I think the industry is sort of thinking this will be a year where we will go deep rural. We've seen the shift in the last 2-3 years, right? So even at BharatPe, we used to think we were a predominantly 30 city players 3 years back, right? And today we are in 300. I think the intent is to go as deep as we can and as much as sort of the cost economics allow us to.
Great. Ganesh, would you like to add to it?
I think Sohail covered it well. I'll just say maybe a couple of things on top of it. I think stability and more consistent predictability of what to expect is important for the ecosystem. I think some of the evolution we have seen has been fantastic, but some things are also moving too fast for the merchant on the street and man on the ground, and more so for rural. I think more stability to drive adoption and education to drive adoption is probably more important than making significant changes. The second thing I would say is I think it will be great for us in general, and this is going to be my theme across the discussion. In general, balancing regulation with free markets is going to help us a lot more. I think we have built a phenomenal infrastructure. We are putting good regulations in place, but we need to step back at some point and let free market economy take over. Because if rural expansion costs more, I think we need to probably be open to have higher acceptance rates and so on and so forth, right? So we need to have some flexibility of incentives plus letting the free market economy take over.
Right. Mihir, what kind of incentive or allocation could we possibly be looking at when we're talking rural?
So I think the government has already started doing this in the last 1 or 2 budgets, and what we expect going forward for this budget also is more incentives, focus on infrastructure development in the rural areas. I think one or two key points that I can think about is the reimbursement of the MDR on UPI. I think that is one key thing that has been given in the last budget. That was, I think, 1,500 crores, of which a part of it was allocated or to be allocated to the UPI reimbursement. In my view, this number is far too less for the industry to kind of, consume, and given the growth in the UPI transactions, what is today and what is expected going forward, I think we at least need a minimum of 6 to 7,000 crores just for the UPI reimbursement. This is again based on some high level numbers, calculations that we have done right at our end. So I think that is the first incentive that we need to kind of proliferate digital payments in the rural areas. The second is, if you remember, the PIDF fund had been created, and there was a focus on infrastructure development through this fund, again in rural areas, right? Like the whole objective being that while the fund has been growing, there has been allocations, there has been disbursements. What we would expect as a fintech sector is an addition of at least a minimum of 500 crores, if 2,000 crores to be allocated to the PIDF fund for this year, so that the rural acceptance can be enhanced, right? And as Suhail said, again, BharatPe is doing much more, and there are similar entities like which can also go deeper. That's the second one. And I think at an overall level, just to add to what Suhail and Ganesh said, is incentives, infrastructure development is good, but also some policy measures on governance, adoption,
Right.
New products, new technologies to be kind of brought in. I think if that is set from the top, then the operators and the regulators can actually implement them and take it to banks and other stakeholders.
Right. Mihir, before the panel, we'd had a brief discussion. You were talking about credit cards on UPI, and it's one of the heated conversations that we've been having in the fintech corridors. Do you think that we need to open all the card schemes and should allow credit card MDR? Like, how should the government be looking at this issue as we speak? Maybe Mihir, you could address this, and Ganesh, we've been having this conversation as well. If you could take it forward from Mihir.
So in my view, I think it's a step in the right direction with credit card on UPI kind of being enhanced or allowed. But what we are seeing today is RuPay credit cards that are being allowed to do this. We also expect, the other card schemes to also come into this fray, and UPI on credit being allowed for, say, a Visa, MasterCard, Amex, so on and so forth going forward. That would just help to increase the customer convenience and use the UPI option more frequently for the credit card purchases. I think that is one thing. Parallelly to this, we also need to keep in mind today we have a MDR on credit card, which is like a very important parameter because there's a risk involved in the credit product. We need to allow that and have that continue for UPI on credit as the product feature and not make it like zero or less, right? I think that is another ask of the fintech sector from the government, and to increase the acceptance of UPI on credit. So I think these are the 2 points from my side. Maybe Ganesh, if you can add.
Ganesh.
I think both are very valid. I would just say, I think we really need to expand the schemes which are available on this, because if we are all, everything we are doing is from the point of view of making it easy for the customer and drive wider acceptance for the merchants. And, in that case, we should be allowing schemes, and the market will settle. Where today, given the interoperability, I think clearly whoever provides a more compelling proposition for the right price will win. I think I would honestly say we need to really step back from controlling or moderating MDR. I think we have gone way overboard. If you look at a market like Brazil, it would be great for us as a country to study the market. The MDR is so high, but over time it settled down, and we have multiple decacorns which have come out of that market on the acceptance side and on the scheme side. So I really think if we let the market is smart enough, we have created phenomenal infrastructure and interoperability, and the price will settle. I think when we start intervening in really pricing in a significant way, then we are there's a level of confusion on whether it's a free market or whether it's a regulated and controlled market. And I think we're a little bit neither here nor there today. We really need to balance this out.
Suhail, would you like to add on to it?
No, I agree. I think the only I'm sort of a big believer on UPI on credit on UPI. We sort of do believe MDR is obviously necessary to make it work. I think the only question is how it is to be done, and it needs to be done thoughtfully, right? Because from a merchant who's used to receiving money on UPI through an app, he doesn't know whether it's a debit transaction or a credit, right? Only in retrospect in his statement he will realize, right? And the big issue which we saw with credit cards never picking up in India was because the merchant didn't want to pay. He's used to cash, right? So, and UPI was a like-to-like replacement in a way, and therefore it sort of scaled. If not done thoughtfully, I think opening credit on UPI with sort of blanket MDR, no permission from the merchant whether he wants to use it or not, it can sort of potentially dent the good work done on UPI over the last few years, right? So I think we're all saying the same thing. It needs to be done. It needs MDR. It needs a bit of free market sort of thinking going into it, but sort of it also needs to be done thoughtfully, not take away the sheen from what UPI has achieved over the last 5-6 years.
Right. Talking about NPCI and Suhail, given the fact that you've been the CEO of BharatPe for a long time now, and you're exiting and you're planning to set up your own fund, I'm sure you'll be looking at setting up, investing in a lot of fintechs going forward through your fund. Help me understand. I mean, the centralized fintech operators, I mean, there are bodies like NPCI. But do you think that there should be larger bodies or larger institutions that can look at overall fintechs instead of just focusing on the payment space? Is that the need of the hour?
I actually don't know, right? So I think fintechs always used to operate under the premise that we are doing good. We have to listen to NPCI, we have to listen to someone else, but otherwise we are unregulated, right? But and again, I don't mean with the wrong intent. I think a lot of the regulations which have come in are actually value creating from the long-term point of view. But it's almost like RBI said, I'm not regulating you, but I'm regulating you, right? So wouldn't it be just simpler if all fintechs were regulated by RBI, right? So that there is no agency problem, because a lot of times fintechs come to know of regulations being imposed on their banking partners, and therefore they have to cater to them, and they don't even hear it directly from RBI, right? Again, not going on the regulation, I think most of the regulations were right, but like there is sort of so much lost in translation when a RBI tells something to a bank, who tells to an NBFC, who tells to a fintech partner, comply with this, right? And we don't even know what we have to comply with and how we have to comply with. I do agree with sort of your premise on there needs to be a sort of body which is looking at it all together. My only question is, why is that not RBI itself to sort of avoid creating more bodies in the system?
Suhail has been on an operational front so far, so I'm sure he's defending the fintechs he's been working with. But Ganesh, you put in your hard-earned money. I mean, you've been somebody who's actually invested in fintech companies. Do you think you'd want to comment otherwise? Should there be proper regulatory bodies? I mean, RBI of course is there, but should there be like maybe regional or central level bodies that could look at fintechs besides just payments?
Yeah, it's a tough question because I think regulation is super important. I don't think any of us are disagreeing. I mean, we invest in 15 countries. 80% of our companies are regulated because we invest in fintech and fintech adjacencies. And in several countries, we work with the regulators where they are more open and they're more accessible, frankly. So it's very much essential. If you want to scale and change and make transformative change, it's essential, right? Mm-hmm. But having said that, it is super complicated to have too many regulators and not know who's your boss, right? I mean, we have portfolio companies which are reporting to three bosses right now. 3 different regulators, and still there are parts of their business which have question marks. So I generally get nervous when we try to have newer regulatory bodies. I understand that regulators are under pressure, they have lots to do, etc. But look, that's part of our job, right? We got to figure out how you provide clarity to the market that market can then deliver, right? And how do you enhance capacity? Just the one other point I'll add to that is, yes, in some countries in the interim, what's happened is people have realized digital payments is a fast growing space and there are lots of complex elements to that. And then there is other fintech. So there is payments and there's other fintech. So in some markets, you had the traditional regulator like RBI. regulate everything that's fintech except for payments. They've had a different regulator for payments, and there are lots of stuff going on in the payment ecosystem, for B2B, B2C, bill payments, all kinds of stuff. So they have done that for the time being, and that seems to have worked well till you get to a point where there is capacity for the umbrella regulator to be able to handle everything. But
Right.
I would resist creating a body then which becomes permanent in regulating something new.
Right. All right. Interesting. Mihir, taking it forward, you were talking about payments, and there are a bunch of payment banks in the country. But do you think it's time that payment banks were also allowed to do lending in a limited way? Because the lending as a sector has been growing phenomenally, and almost every fintech that I've been covering of or reading of has actually been getting into the space, if not already. Do you think that that's a area, that's a segment that the government should also look at?
Sure. So I think from an overall industry or ecosystem point of view, payments, as we all know, has been the hook to kind of get customers in. And then, actually it doesn't make a lot of money for the fintechs or for the ecosystem participants. What makes money is the lending part of it, the other cross sell of the other financial products that you can potentially sell to the same customers that you have got via the payments hook, right? So I think that's the a basic kind of assumption or basic premise that we have seen working well in the last few years, not only in India, but across the world, right? So I think that's what it is. Having said that, Payments Bank was set up for a specific purpose, a specific reason, and that was to kind of increase the penetration of, digital payments, have more underserved segments coming into the banking space and, kind of serving them. So I think they've been able to do that fairly well. 3 or 4 of them, whoever has been operating well. The next step is obviously opening up lending and other financial products in a limited way. And maybe there have already have been few discussions in this regard between these payment banks, between the the entities that are taking these decisions. So I think that already is being discussed. What we expect a firmer push from the government and the regulator, and this will just help to open up the market, make it more beneficial for the same customer to be served by the same bank, be it a payments bank, and getting not only the payments part of the business, but also the lending and other. So it's like for the customer, it's a one-stop shop rather than saying that, hey, I can't do lending, please go to this bank, or I've tied up with this bank. It just creates discomfort for the customer. Right. So also taking the customer convenience, it makes sense to kind of open it up to for in a limited way.
Sure. Suhail, what are your thoughts on it?
I agree with Mihir. I think from we have to solve for, and RBI has done actually a lot in the last set of regulations on solving for customer, right? And this is a step in that direction. You don't want a customer to sort of have one bank for his payment, second bank for his sort of FD, third bank for his current account, and like whatever, right? So credit card and loan. I think obviously it will require sort of doing it thoughtfully, sort of open some segments, scale, see, correct, etc. But I think from a customer centricity point of view, I think if we give the customer the choice of working with one bank, if he chooses to, if the terms are the best, I think that's a step in the right direction, right? So I would sort of concur that we should open up lending, cards, etc. on digital banks as we go forward. I think again, one step at a time probably. So it will be a 4 or 5 year journey, but we need to get there.
All right. So instead of having a Baroda for taking loan and maybe an SBI for putting in your savings, it's good that you have a one-stop destination for all your needs.
It's still a choice, right? I think neobanks have really made that easy, that on the same app you can operate across multiple bank accounts, right? So the customer will still choose based on convenience and the offering, right? It's not like you're forcing a customer to bank with one bank, but at least they need to have that option, I think, at their disposal.
Right.
So, see, I was smiling because I have a point of view, and with all due respect to Mihir and Suhail, I agree with what they're saying in terms of offering the customer a holistic set of services. But my fundamental question is around, why do we need so many different types of banking licenses? If eventually you want the customer to go to any of these banks and be able to avail of holistic services 360 degree they're offering, I would say rather we should. And by the way, there are fintechs who have also provided who have expanded payments in a phenomenal way without being a payment bank. I mean, we all know the names. So the point is, I would love to see how they start consolidating this, saying how a payment bank, like some of the cooperative banks, one of our portfolio companies, Shivalik, has become a small finance bank. And that's when we invested. And then the path from there is to become a universal bank. So I'd rather love to see this kind of going in on a certain journey than the complexity of having multiple licenses, which I think can also be confusing for the customer. And frankly, the customer would like to have multiple options. From the bank's point of view, they would love to say, I want to monetize out of lending as an option as well. But from the customer's point of view, people are used to not always logged into one bank only, even though sure that happens too.
Right, absolutely. Ganesh, given the paucity of time, would you like to highlight one key wish if you'd have to ask the government ahead of the big bang budget that we have?
Oh, wow. One key wish. I think looking on to the future, I would say bring fintechs more clearly into the gamut of regulation and drive education on account aggregator framework. I think it has huge potential.
All right. That was crisp. All right. Mihir, just taking it to you, there have been a lot of points that we've discussed in the past, and I think only a brief, a fraction of that could be covered in such a short amount of time. But as we speak, if I were to ask you, what is the one key, the most important issue that you'd want to be addressed by the government this budget? What would that be?
I think the most important issue is driving the right policies for the right products. And what I mean by that is there are so many products that are available in the market today. How do we drive it from the top to kind of make it more, reaching more of the masses, more of the customers? And I'll give you a few examples on that. So if we take a transit product, right, which we have today in the market, which is NCMC, why is the government not pushing the PTOs to kind of adopt the transit product NCMC, which can be universally accepted at all trains, buses, and other kind of stations, which will make that one product very, very powerful and in the hands of customer can use it for any of the trends. That's just one example. Second, from a policy perspective, again, please don't regulate pricing. Let the market decide what the pricing should be. And what Ganesh also said, I completely agree with that, because pricing is something which should not ideally be regulated, even if we consider it as a public good or whatever we say. So I think this is what I would believe, that policy measures should be in the right direction to promote products which are already there in the market.
All right. Suhail, I would let you summarize the conversation by, again, highlighting one of the issues that you think is perhaps most dear to you, especially at a time when you'll be setting up your own fund going forward. What is one of the key issues that you'd want the government to be addressing this budget?
So I think my favorite two topics have been taken by Ganesh and Mihir. So let me go to the third one. I think just higher infrastructure spending and right allocation of it, right? So government is actually spending a fair bit of money. It needs to go up, as Mihir said earlier in the conversation. But ensuring that it reaches the right hands, it reaches really the folks who are driving sort of the network expansion is important, because today a lot of the fintechs are at the mercy of the banks. Some banks are kind enough to share it, some banks are not, right? So, but there should be sort of a lot more clarity around that. I think, I would add one more, unfortunately, and against your wishes. I think there needs to be a bit more thought around the service tax element of this as well. Because, for example, a lot of the banks, NBFCs, on lending, they don't incur any service charges, right? But when a fintech is allowing a bank or a NBFC to lend, the small income we make out of it sort of also goes through a 18% service tax. That's and it's not offsettable by the bank because they don't anyway have any sort of GST cover, etc., right? So, how do we do sort of small changes on that to enable sort of fintechs which are already working on wafer thin margins, given the limited sort of amount of money you can make on payments, would be sort of helpful from expansion point of view.
All right, then perhaps the government could look at some amount of consideration, given the fact that margins definitely are wafer thin. But on that note, I would really like to thank you, all of you, Suhail, Ganesh, Mihir. Thank you so much for joining us today and sharing with us your thoughts on what fintechs want ahead of the big budget. I wish you all a very good day.